Hello and a very warm good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business policy and economy. To my left are my colleagues Kartik, Malhotra and Suyash, Maheshwari. Gentlemen, good morning.
Morning, Shweta.
Markets opening on a tepid note, Suyash, this morning. Flattish opening for both Nifty and Sensex.
Yes, Shweta. So Indian markets witnessed a sluggish start to the week. Now this is on the back of a muted opening for most Asian stocks. Now remember, we are coming off a back of one of the worst weekly falls that we have seen. Now both headliners corrected by about 2.5% each in the week gone by, and this was the worst weekly fall since February of this year. And concerns about a higher rate regime, crude oil prices inching towards a $100 barrel mark has been weighing on investor sentiment. Now the markets was expected to have a muted opening, and Indian markets largely had a flattish opening. Nifty was down about 23 points at open this morning. However, we have seen some recovery in both headliners, and currently Nifty is trading in the green. However, it is still currently below its immediate resistance levels of about 19,700. Now shifting focus to the broader markets are also showing signs of weakness. Now the small cap Nifty small cap index was up about 0.2%, whereas the mid cap index was down about 0.1% in the morning trade today. And I mean, the broader markets also saw some correction, but the the magnitude of correction wasn't as much as in the headliners. Both indices dropped about 1.5 to 2% in the week gone by. Now among the sectors today, apart from Nifty, auto and media and realty stocks, most sectoral indices were in the red today. The IT pack was down about 0.4% in the morning trade. PSU Bank, which has which outperformed the market and rather was the only sectoral index which performed in the week gone by, also witnessed some profit taking. It was down about 0.66% in the morning trade. Nifty Bank continued on its muted path. It was down about 3.5% last week. This morning it was down about 0.1%. Apart from that, Nifty IT, I think I already mentioned that, it is also trading sluggishly this morning.
All right, so that of course is the lowdown of how Monday has started on the stock markets. Let's quickly get in Gaurang Shah, Senior VP Geojit Financials, joining us this morning. Gaurang, thanks very much. Appreciate you taking time out. Let's quickly begin with what's weighing on markets this morning. A lot of global and domestic cues.
Thank you, Shweta, and morning to all of you all. So I think it is good to see stability in the market as we opened for trade this morning. Remember last almost about 25 odd days since the time we started this month of September, we've been all over the place from 19,260 1st of September to 20,200 somewhere around 15th or 16th of September. And from 18th of September till date, we are at possibly 19,670 odd levels. So this 25 odd days, we've been all over the place. I think stability is what should possibly be the order of the day. Don't expect any major sell-off or any kind of major outperformance. Remember, we are in the F&O expiry week, monthly F&O expiry week. I expect a little bit of choppiness and volatility as we approach the expiry this week on Thursday. But I think we should possibly find some stability, consolidation, and possibly some amount of buying also at lower levels, which we have witnessed even last week. So I think possibly if you've been waiting down at the sideline expecting a correction, I think one should possibly use these kind of corrections to accumulate sound quality stocks from a long-term point of view. Your colleague was mentioning, Suyash was mentioning about crude oil prices still above $90 a barrel NYMEX and $93 a barrel Brent. And the rupee is also weak this morning against the dollar, 83.10, the last that I saw. That is creating a little bit of concern. But overall, post last week correction, I think we should find a little bit of stability.
The rates in in the European markets. Good morning, Gaurang. Hi, this is Kartik. What about the higher for longer sentiment, which is likely to continue in European markets? Is that likely to weigh down on Indian markets as well?
Morning, Kartik. So I don't think so. From the beginning of this year, we all were aware about what the situation is in Europe and US and rest of the world. we all were aware that inflation is a concern over there. Interest rates regime is possibly going to have a significant impact not only in their markets and economy but also across the globe. So whatever happens in Europe and US, my sense or our sense, Kartik, is that it may have a knee-jerk reaction, and I think very significant, which may lead to huge sell-off. Though last week beginning we've seen decent number of sell-off from the foreign institutional investors, but against them, I think the domestic institutions have got the liquidity, power, and capability to withstand any major kind of a sell-off. So it may be news-based knee-jerk reaction, which may last maybe intraday or maybe about 1 or 2 days.
Okay, and Gaurang, you also mentioned dollar against the rupee at about 83.1 this morning. Now with India by next year likely to be, in fact, slated to be part of the emerging market index of JP Morgan, how do you see that really panning out for the Indian rupee in the next 1 year to 3 year horizon?
So I think that will play a significant role, and along with that, what is the view and commentary from the Monetary Policy Committee, and what Governor Das has to tell us. But possibly this may improve. Two things that I am quite optimistic about this inclusion. One is the participation, and second is the liquidity. As and when it happens, of course, it will not happen immediately, but we should see some amount of more inflows in terms of dollars. And if we are able to prove numbers on the larger, macro data points, then the flight to safety from the equity market as far as FIIs are concerned could possibly slow down, and there might be positive flows also.
Okay. Before Suyash comes into stocks in action today, one more question from me, Gaurang. Do you feel now that the days of bull run, the days of frenzy over the small cap, mid cap are now pretty much coming to the end of their term, or is this just a minor blip right now and we'll see the rally in small caps and mid caps take off again?
So, Kartik, we discussed this. I think we've been interacting almost every week, and over the last week or fortnight, we had sound caution in terms of the run up in the broader markets, that is mid cap and small cap. Certain names were flying around without much of credibility and more of liquidity chasing into those stocks. So our view at Geojit is that, if you touch anything and everything in the mid and small cap universe and expect to make profits, I think that's not going to be the order of the day. You need to be sector specific and stock specific when you're trying to venture into broader markets. That is mid and small. And with respect to the small cap universe, I think you need to have elevated risk appetite. If you don't want to do that, if you don't want to be the Robin Hood, then possibly stick to the large cap where valuation is still quite justified and there is earnings visibility also.
Just one quick question from me before I hand over to Suyash. As far as foreign money coming into India is concerned, you said it will happen. FPIs have sold off over 10,000 crore rupees in the first 3 weeks of September. That remains a cause of concern. Do you see FIIs, FPIs coming back to India given the volatility that we have seen over the past 25 days?
So during that week only, Shweta, we made a high of 20,200 when they were selling.
That is correct.
So I guess they will come. And remember one thing, I think with the kind of GDP growth rate that we have, with the kind of earning visibility that we have, and with the kind of optimism, yes, there are two particular issues. One is state election up until December 2023, and then 2024 we have a big election. So from December to possibly May, end June till we have the outcome of the big election next year, markets could possibly face a little bit of choppiness, and FIs might possibly or FPIs might possibly pause, not necessarily sell, but maybe pause till the time there is clarity.
Now, Gaurang, I mean, at a time when, treasury yields are at a 16-month high, the dollar index is surging, is it really rational for us to expect foreign investors to return to emerging markets at this point in time?
Well, so it's more of a perception that you have, Suyash. Okay, if not India, then where do they go? In their own markets, they have issue in terms of inflation, interest rates, etc. And remember one thing, dollar is not only strong against the rupee, dollar is strong against the major currencies, including euro, including currencies of emerging markets. And possibly you might see elevated levels on the dollar front against the leading emerging market currencies, including Indian rupee, for some time. But whether it is going to stay elevated above 83 for a longer period of time, our our view is that that's not going to be happening. And in terms of flows coming into it, well, what my sense is that any fund manager, whether it is a domestic guy or a foreign institutional participant or an FI, would definitely look at incremental growth wherever he or she invests. And I don't think there are many economies like India in this part of the world which will give you that kind of a run rate.
Now, Gaurang, in the recent months, or at least in the recent rally that we have seen a sectoral shift or churn around. First, it was the SpaceX stocks, then it was the railway stocks and defense counters. Any particular theme that is looking attractive to you, at least right now, for a horizon of, let's say, next quarter or so?
Well, short-term calls is something that I, normally don't take. But let me give you a perspective. I think possibly by first weekend of October or second week onwards, we'll have the second quarter earnings unfolding. Now, if I had to look at that and possibly, identify a couple of sectors, then, by default, banking and NBFCs are going to do good. Autos will do good. Uh, Cement with the kind of offtake and price hikes, that looks interesting. Uh, if you are not looking at immediate short to medium term, and if you have a little bit of longish time horizon, then post the first quarter numbers, I think a lot of IT companies have announced, quite a few big deals. So IT will be in spotlight. Uh, our sense is that specialty chemicals and insurance, life insurance related plays are likely to come back with the earning visibility. So these are the few pockets, and the three sectors that you mentioned, Suyash. I think it's not game over for defense related stocks or railway related stocks or power generation, power transmission, distribution, and power equipment manufacturing companies. The government has spoken about a vision for the next 3 to 5 years. And if I have to look at the order book of all these companies in these three sectors, then there is absolutely no disappointment. In fact, there is extremely positivities in terms of more orders coming through. And by the virtue of execution of that order book, earning visibility is going to be very, very strong.
Now, Gaurang, last week we saw that SJVN corrected sharply after government decided to divest some of its stakes. Now there are about 21 PSUs which have in which government stake exceeds the 75% threshold. Now, in the light of recent run-up, should investors in these stocks be concerned?
So you have to look at the run-up also, Suyash. SJVN, NHPC, of course, no specific comments because we don't have a coverage. But whenever stocks run up, maybe about 30-40% in a matter of maybe about a week, fortnight, or maybe a month, there has to be a little bit of correction coming in. And these are the names which were historically speaking. Correct me if I'm wrong, Suyash. Since the time they got listed, they were underperformers. And this is exactly the story that I was telling you when I was talking about power generation, transmission, distribution sector. This order books is likely to grow exponentially, and of course, execution of that will translate into earning visibility. So it's a perception of with what view you have invested in these stocks. I'm not saying that these orders will make translation or transformation in earnings immediately. These are long kind of projects that come through, and they take equally long time to execute. So if you're getting your kind of return that you had in mind post this run up, then I think it's wisdom should prevail upon you not to expect more, not to be greedy, and take home whatever you can.
Now, before we move on to stocks that were in the news today, JSW Infra IPO opens today. Gaurang, should one subscribe to that offering?
So we have issued a IPO note on JSW Infra, and I think it's one of the largest companies in terms of the services that it provides into port, container warehousing, logistics, etc. At the present price band that the company has announced, we have issued a IPO note with a recommendation of subscribe from a long-term point of view. this is also one sector, Suyash, which will take time because, as India opens up in terms of manufacturing and services activity, I think logistic activity will also go up, but it's not going to be immediate. It's going to be over a period of time. And I think this Bharatmala Pariyojana and Sagarmala Pariyojana should augur equally well for the logistics sector.
Gaurang, there are also reports of JSW Infra wanting to bid for airport projects in India. I know you don't like to comment much on Adani, but do you see this as being, one step in the direction of one formidable player who could be out there giving Adani a run for its money?
Well, there is place for everybody, Kartik. I mean, more the merrier. I think, and when competition comes in, it makes a very healthy environment, not only for the incumbents who are competing each other in that sector, but also for investors, because it becomes a very healthy and a challenging atmosphere. And remember one thing, government has also spoken about improving connectivity tier 2, tier 3 cities under Udan 1, Udan 2. And there are going to be more, airports, ports, etc., coming up in the next couple of years.
In fact, as we are speaking, Jyotiraditya Scindia, Civil Aviation Minister, is inaugurating Tezu Airport in Arunachal Pradesh, and apparently there are 3 more to be launched, in quick succession. So obviously, Udan is finding some wings, but yeah, carry on, Gaurang.
Yeah, so that's what I was mentioning, and not only this, I think in the next 2 to 3 years or maybe 5 years down the line, you will have better connectivity. That will give opportunity to new, companies in the aviation sector as well. And equally so for those companies which are into, port corridors, container warehousing, logistic, etc. So, and having only one dominant player is always not very healthy. Like, in case of telecom, there are 2 major players. And with the kind of population that we have in India and the subscriber base, I think it would have been healthy if we would have more competitors. So, I think competition is always healthy, Kartik.
All right, competition is healthy, but do we have enough airlines is the question, and are the airlines that are currently in action going to be operable over the course of next couple of years? That of course will be a question again, but let's move on to some of the stocks that we're tracking.
Certainly, Shweta. So one of the stocks that I was tracking earlier this morning was Delta Corp. Now the stock is down about 18% or so this morning, and it is on the back of Delta Corp receiving a tax notice totaling about 16,822 crore from the Directorate General of GST Intelligence on Friday. Now, Delta Corp said that the demand notice is for the period between July 2017 to March of 2022. Now, the first notice of about 11,000 crore is directly raised against Delta Corp, and the other 5,600 crore notice has been raised against 3 of its subsidiaries. Now, Delta Corp said that the GST notice is based on gross bet value and not gross gaming value, and it said that it would pursue legal remedies to challenge this order.
All right, before we discuss other stocks, quickly let's understand what's the story. It's been building up for a while. There was a tax notice. The game has now upped. It could be as much as 31,000 crore rupees collectively. Over 80 companies, online gaming companies to be particular, they are facing a retrospective taxation, but they're saying that we have paid up. We paid up on the basis of what we knew as far as GST is concerned. What's the big story here, Kartik?
Shweta, the big story is that the government in its 50th GST Council meeting said that we are only clarifying and we are not changing the GST rate on online gaming. In the same breath, the government also said that there is going to be no distinction between game of chance and game of skill. So online gaming, e-gaming, all of that sort of, came into the highlight, of the GST 50th Council meeting. And the government said that there's going to be 28% tax on face value and not really on the platform fee. I think what the gaming companies really wanted was that, okay, instead of 18, we are happy to pay 28%, but the 28% is going to be on the platform fee we charge, not on every rupee that gets planted onto the platform for gamers to play with. So the winning prospect of a gamer then gets reduced, because on every 100 rupees that you put in a gaming platform to play, you say 28 rupees of that is straight away going as GST. So their chances of making a winning of even a rupee then go up 29 times. So they've got to make 29 rupees to make 1 rupee of winning, because 28% straight away goes into tax. tax, and even this 1 rupee which they earn is actually subject to a tax of 30% or so. So overall, that has been the bone of contention between gaming companies and Government of India. Now, this GST order which has now come, 80 companies, and now the total volume of GST evasion, as the government is calling it, is at about 31,000 crore rupees. Now, gaming companies are saying that this is retrospective and they are likely to move court again. Remember, I think in the case of Gamecraft, the matter was, cleared by Karnataka High Court in favor of Gamecraft. And it said that government cannot charge because the rules are ambiguous. So the government cannot charge whatever, I think 22,000 crore rupees or, whatever the government was claiming was due from Gamecraft. And now it seems that with these added on Delta Corp, on other 80 companies, the added retrospective tax is now to a tune of about 31,000 crore rupees, which is obviously going to make a dent in the gaming companies.
All right, and there has been a movement on that case as well. Government moved after Karnataka High Court order. Government, the Directorate General for GST collection, they moved to Supreme Court.
That's right.
Supreme Court has stayed
the Karnataka
matter,
High Court,
which essentially
order.
means that this is still in the realm of speculation whether this retrospective taxation will be applicable or not.
And
the
is
online
it fair
gaming
to call
companies,
it retrospective, because the government said we did not change the tax rules, we only clarified the tax rules.
And players have been paying up GST. So I think it's I think somewhere, I mean, if you come to think of it, so far they've been paying taxes, they've been paying 18% and the government been accepting that.
18% on face value versus now the requirement
28%.
of 28% on the entire amount.
All right.
On platform fee versus face value.
Absolutely, and that is going to be a bummer for a lot of online gaming companies. Gaurang, what's your view on online gaming companies? Is there a future as far as e-gaming is concerned in India?
Honestly, I think the attraction towards dabbling has never been at a lower level as far as India is concerned. And, though we don't have any specific coverage on any of these companies, what I would, just a perception over here, Shweta, I think there has to be clarity with respect to online and offline gaming. With the kind of policy changes by the government or by the GST Council and the recommendations that have come through, does create an atmosphere of a hanging sword, which with a lot of uncertainty and no clarity. And whenever whenever the matter ends up in either a High Court or a Supreme Court, unless and until you have a decisive outcome or a judgment or an order, there will be choppiness and volatility. Unfortunately, we don't have any coverage on either online or offline gaming companies, so I won't give any stock-specific recommendations or replies with respect to buy, sell, and hold. But I think one needs to be cautious, and like I mentioned, unless we have clarity, there is always going to be choppiness and volatility with respect to news flow.
Now, Gaurang, certainly because you don't have coverage on gaming stocks, but for a company like Delta Corp, which has a market capitalization of about 4,000 crore, a tax notice of 17,000 crore seems like a death blow, right?
Well, this is the top of, this is just the tip of the iceberg. I mean, you don't know what will happen next. So, assuming anything is going to be also equally catastrophic, Suyash. So, let's not jump the gun.
Let's move on to other stocks that we're tracking, Suyash.
Yes, Shweta. So, SBI was also in the news. The state-run lender has raised about 10,000 crore through long-term infrastructure bonds at a coupon rate of about 7.49%. Now, the proceeds of the bond will be utilized to enhancing long-term resources for funding infrastructure and affordable housing segment. Now, SBI has outstanding long-term bonds worth about 39,718 crores with this issue. Now, Gaurang, I mean, we have seen PSU banks run up quite significantly in the past 2-3 months or so, but more prominent names like an SBI or a Bank of Baroda has not really participated in that, in that surge, whereas small and mid-cap banks have really run up like 2 or 3, like 150 to 200% in that span of time. Now, do you expect that these banks, prominent names like SBI or a Bank of Baroda, can play some sort of a catch-up rally from here on?
Well, we definitely think so. And, double-digit public sector banks had a run-up because of the kind of liquidity flows and the discussion we had in the beginning about small cap and mid cap. Uh, we are a little bit concerned with respect to the consistency of earnings, Suyash, when it comes to smaller government-owned PSU banks. Because out of 4 quarters, 1, 2 quarters will be extraordinary, and the rest of the quarters will be, equally a disaster kind of a performer, wherein the positivities will get wiped out. So we don't have coverage on the smaller public sector names, but State Bank of India, Bank of Baroda, Canara Bank, PNB, these are the 4 banks which are under the fundamental coverage. Out of this, I think Bank of Baroda is under review. So no specific comments on Bank of Baroda, but the trigger that I mentioned about second quarter earnings and a likely possibility of better numbers or better than expected numbers from the banking pack, including public sector banks and private sector banks, would possibly be a trigger for re-rating of some of the public sector banks.
Now, in terms of valuation, Gaurang, how are the private banks looking vis-a-vis PSU banks? Now there were reports that there'll be some contraction as far as net interest margin is concerned for the banking space. So, how, in terms of valuation, how are the private banks looking in comparison to the PSU names?
So, for the time known to me, I think private banks, Suyash, has outperformed public sector banks for a pretty long period of time. With the kind of merger and with the kind of policy changes that the government has put in place with respect to public sector banks, we have definitely seen the health of the balance sheets improve. Yes, there was a time when 2 or 3 banks, public sector banks, got merged with one public sector bank. So that merger process and things to evolve over a period of time takes time. So, and then now that time is over and possibly, improvement is quite visible. With respect to private sector banks, we have coverage on almost all private sector banks. And one bank that I would, step forward over here and recommend with the correction that we had last week on fallback of some, foreign report about concerns on earning is HDFC Bank. No denying, Suyash, that maybe it's not going to be case that banking sector is going to be outperforming for all the 4 quarters in the financial year. There will be a case of a little bit of underperformance, loan book not growing at the kind of level that one would have expected. Net interest income and margins possibly may come under pressure. But notwithstanding what happens in 1 quarter, if you are a long-term investor, then looking at the historical performance of most of the private sector banks, we would definitely have inclination towards private sector banks. So I think one bank, because of the correction last week, which is HDFC Bank, ICICI Bank is also after a decent performance, is consolidating. Axis Bank has managed to cross over 1,000 level after a long period of time. Kotak Mahindra Bank, with the transition or a new person coming in place of Mr. Uday Kotak, that clarity is now gone through. And as far as IndusInd Bank is concerned, our view is that the commercial loan book growth is going to be an outperformer, which may lead to earning visibility as well.
All right, Gaurang, we'll leave it at that. Thank you so much for taking time out. Thank you for joining us here on News 9.